Ian McCafferty stands alone again. The Bank of England MPC member voted for a quarter-point rate rise for a third month in a row, but was outvoted 8-1. With me down the line to discuss is Nick Stamenkovic. So Nick, we've had the minutes which highlighted the divergence between domestic strength, save for inflation, and foreign weakness. The worry list seems to be a case of Greece out, Brazil in. But what do you think the big takeaway was?
Well, I think the Bank of England is becoming less concerned about inflation, certainly over the near term. It downgraded its CPI forecast and expects inflation to be below 1% by next spring. So that's one important factor. And the other one is they're now no longer as confident they were that the current level of unit labour costs. However, at the same time, the MPC in general doesn't seem to be too concerned about the impact of the weakness in emerging market economies on the UK activity, citing continued strong domestic demand, though some members were more cautious than others. So overall, it's pretty clear to me the Bank of England is in no urgency to raise rates, and I cannot see a rate hike before the spring of next year at the earliest.
Next week, we could see a rise in UK unemployment, although some say this would be due to an uptick in productivity. If so, doesn't rising wage growth and strong consumer spending point to a rise? Some experts say they doubt very much the market pricing that rate hikes are more than a year away, but do you think the Bank of England wants to raise rate? And if so, when will it come? 2016 or 2017?
I think they'll probably go next year, probably in May next year. I've actually just pushed back my forecast because of the growing economic pressures from overseas. But the domestic economy is still holding up pretty well. Yes, there are signs of softening, but overall activity is pretty strong. The labour market continues to tighten, and we start to see some signs of wage pressures. But the Bank of England seems to be giving the impression they do want to raise rates, but probably next year. I think to hold out to 2017 is unlikely, though it cannot be ruled out.
We also had the ECB minutes, of course. Pre-release euro sterling was strengthening, but the picture has changed. Was this a case of false hope and perhaps another reversal is looming, or will the FOMC jump on the disappointing hike bulls bandwagon?
So for the moment, the ECB doesn't need to do anything, and I think it's unlikely they'll move in October. But if the data continues to disappoint and inflation is downgraded in December, then I think there's a better than even chance the ECB will announce an extension of its current asset purchase program at the December meeting. There has been some talk that they might cut the deposit rate, but I think it's unlikely. The majority of ECB members have been hinting that if there is a further move, it will be the extension of the current program rather than lowering rates. So I think that's the most likely way forward. But even taking that into account, there's no guarantee that inflation will move back to its 2% target over the medium term. And you look at the forward measures of inflation expectations, they've actually been falling recently, which clearly suggests investors are increasingly concerned that price stability will not be restored over the medium term.
So with all that in mind, how do you expect these so-called favourite currencies to trade against each other moving forward?
Previously, I thought the euro would weaken against the dollar, predominantly because I thought the Fed would be the first to raise rates. The Bank of England would follow, and we'd see further easing for the ECB and probably the BOJ. The big change has been in the Fed. It's clear that the Fed is it's more dovish than it has been previously. It left rates on hold in September, and the comments of Ms. Yellen at the press conference clearly signalled they were not preparing the ground for a rate hike, although that seemed to be somewhat changed by a speech a week or so later. So in light of that, today's FOMC minutes will be quite important to see how close the Fed was indeed to pulling the trigger on rates. But I cannot see scope for a rate hike, before the end of this year. I still think there's a greater chance of a rate hike in December than is priced in the markets. But the markets are confused as to what the Fed is actually following in terms of the key parameters. So another delay in the rate cycle cannot be ruled out. I think the dollar is going to struggle to make much upside against the euro in the next 3 months.
Nick, great to speak with you. Thank you. Well, viewers, the Fed is on everyone's minds, but will they give us any more clues as to future policy? The TV team will be bringing you a roundup of the week's biggest moves tomorrow in our wrap-up, so make sure you click back for that. Bye for now.